HDFC Bank has come out with its Q3 business updates. I'll come to you in just a bit, but let's just look at the numbers first. Now, India's largest private sector lender, HDFC Bank, reported a 62.4% YOY or year-on-year jump in its gross advances for the December quarter. On a sequential basis, however, gross advances were up about 4.9% or so. The domestic retail loans, that skyrocketed by about 111% again on a year-on-year basis, but on a sequential basis, they were up somewhere around 3% or so. The bank's deposits saw a 27.7% uptick year-on-year, but a meager 1.9% growth sequentially. CASA ratio, the current account saving account ratio, stood at around 37.7% in Q3 FY24 compared to 44% in the year ago period. However, on a sequential basis, it improved marginally by about 10 basis points or so. Now, a higher CASA ratio is generally considered favorable for a bank, as it indicates a larger share of low cost and stable funds, which can contribute to net interest margin and improve the profitability of the bank. But remember that the numbers on a year-on-year basis are not comparable, and last year's numbers are just that of HDFC Bank, whereas Q3 and Q2 numbers are of the merged entity, which meaning includes the numbers of HDFC as well, which by the way, remember the merger came into effect in July 1, 2023. Coming to you, Kranti, how are the numbers looking? Deposit growth at about 2% quarter on quarter seems to be lower than what the street was estimating, isn't it?
Yeah, you made the disclosure, comparing the year-on-year comparison because of the merger is there. Now it's a standalone entity at this point of time. And Suyash, it's the largest financial conglomerate, HDFC Bank and HDFC Limited. When they got combined together, there are a lot of things get merged together, the books and all. So the one thing I can see is, even though the pace is slow, but it's running in a positive direction at this point of time. So 1 quarter numbers, we need to allow the bank to settle down, because the bank is the second largest bank, largest company in India with terms of the market capitalization. So we need to allow the bank to give ample time, probably 1 more quarter, okay, to see the brighter spots at this point of time. Right now, yes, the numbers seems to be less if you do the comparison quarter on quarter, but there is a aberration when we compare year on year. Okay, so it's moving in a positive direction. That's where we can see the same thing. We can see the reflection in the stock price also. The stock was in the consolidation. Now it is in very baby steps. It is inching upwards. So most probably we need to wait. Quarter on quarter comparison is slightly a shorter term at this point of time, because of the size and scale of the business is concerned. Most probably we need to give, of course, because as a regulatory norm, they need to give quarterly disclosures, but we need to allow the bank, the management, to settle down further to show the strong set of numbers going ahead.